Good morning. This is Josh Hayes with Hedge Plus, and here's the market monitor for Tuesday, September 16th. We're continuing to see strong export inspection numbers. It was something important to see because we've started to lose the price advantage we've held basically most of this summer, and you don't want to see a drop off start to happen there. We had corn and wheat inspection. Actually, all three were across the board better than expectations, but corn and wheat continue to exceed the pace needed to meet the USDA's current forecast. We did, even though we beat expectations with soybeans, we did see them hold up pretty well, not too far behind USDA projections. And right now, soybeans are the one crop that we have an actual price advantage over. We still have a significant price advantage over Brazil. We're building a greater advantage over Argentina. It should lead to sustained strong sales here for soybeans. Hopefully, we can bridge that gap between now and the time that we do finalize a deal with China and those sales return. All in all, considering we've had no sales to China yet this year, the numbers are holding up pretty well. It makes sense. It's not talked about, but with China buying so much from South America, the prices are elevated there. It's leading to larger and more purchases from other countries that we normally might not see buying from us. It's getting us by. Obviously, the cherry on top is getting China back, and I still believe that will happen. But it's certainly not nearly as dire as many make it out to be, or certainly, definitely not as dire as many predicted. Notebook Crush came out, monthly report came out yesterday, showed August crush just under 190 million bushels. That's 20% over the same month last year. Massively beat expectations, and all the while, in spite of that massive production, stocks fell well below where they're expected. So, would anticipate another strong report next month. Also, helping the overall situation with beans. Starting to finally see people talking about what's coming, what's going to be coming to the market with the massive crop we've got coming. Patrick talks about it all the time. Where are we going to put it all? And the lack of storage for a crop this size is going to inevitably lead to a lot of grain coming to the market at the same time. And that's the kind of price pressure we can all expect to see relatively soon. And then also we're seeing the price competition for wheat and for wheat growers. The price competition with wheat is just intensifying. The prices are dropping in other places. Weather, which we'll get to here in a moment, is favorable. I can't tell you how many places I've read in the last few months where they had dry conditions and needed rain, and have since gotten it. So, wheat market is certainly held back. As on Friday, the USDA showed that supplies are swelling. It's it's just a tough situation for wheat. Hard to see a high amount of upside there, short of something changing dramatically. Taking a look at the weather, looking like we might possibly get some rain in key areas of the Midwest. This is the southern sections of the Midwest, eastern, out east, southeast, Delta. I think the Delta and the Midwest are set to get some rain here. East and parts of the Southeast, maybe perhaps not yet. But the overall near-term and long-term, both forecasts and models are starting to project some rain in those areas, which should help alleviate a lot of worries about how the crop's going to finish this year. It's definitely already set in that we've lost some yield, but that will start to ease some of the concerns going forward if we do, in fact, get some rain in these parts. We're talking parts of southern Illinois, Indiana. Those have been the hardest hit spots. tying that into ratings, ratings came out last night. Again, another 1% drop for both corn and soybeans. Puts the corn crop now, overall ratings, at the highest since 2018. It had been 2016, so we're starting to see that drop. Would anticipate we're going to continue to see drop in yield from the USDA going forward. But with what they did with harvested acres and increasing that, obviously still anticipating a big crop. Soybeans, like I said, slipped 1% as well. It's now a crop that had been rated the best since 2020. It's now a crop that's more just on par with the crop last year. So conditions wise, nothing, no longer outstanding with soybeans. So that's something we'll be watching as well. The damage is somewhat done by the dryness we've seen. This rain that's coming would be more helpful towards preparing us and improving soil moisture for next year more than anything. In China, the Yellow River Basin getting needed rain. It's one of those areas I was talking about where they had seen dryness that is getting rain now. And Australia has been getting rain that they've been needed. Argentina, they're getting rain right now, which will help with wheat development. Might slow planting down a little bit, both there and in Brazil, but overall it's rain that they needed, so they're not disappointed at all. The one spot that still continues to have concerns with the lack of rain and is still in an extended period of dryness is the EU, France, and Germany. It will lead to more importing of wheat for them here, but as we've talked about, that's not really impacting prices because we are at a glut of supply of wheat, no shortage of supplies there. So any crop loss in the EU and parts of Europe has been pretty much mitigated by the complete lack of supply concern. Taking a look at the prices overnight, nice to see we're green across the board after we saw losses yesterday, but relative to last Thursday on the last market monitor, which came prior to the report, since Thursday morning, corn is up 7, soybeans are up 16, and wheat is up 12. So we have seen a bounce. I know that seemed confusing to many, especially in this industry, why we would bounce on a report that actually raised production in spite of lowered yields. I think people were expecting the lower yields and therefore to see smaller production numbers and to have acres increased to offset any loss in yield and actually raise production numbers. You wouldn't think that would lead to a rally right after. But as Patrick has talked about yesterday, he believes this is a rally driven by end users and feels as though once their short-term needs are met, we're going to run into a massive glut of crop coming to market at the same time. So no reason to think we're out of the woods just yet. Pat would love to be wrong on this. Love to see us just continue to rally, positioned in the accounts with protection either way. So we will wait and see, but we are up on the overnight. It'll be interesting to see if this carries on into today. That's all for today. Hope everyone's harvest is going well or will be going well. And tomorrow we will have the Grain Gauntlet, our weekly Q&A. Thursday I'll be back with the Market Monitor. And Friday we'll close out the week with Jason's Feedlot Focus. He'll go over the cattle and hog markets. That's it. Have a great day, everyone.